could it be? It's already been a decade. Coach Jesse Durham of Durham Talents around here at the Cash Compound has reached this milestone of freedom in his banking system. 10 years of growth, 10 years of wealth building, and we're going to talk about it on this episode. Remember, here at the Cash Compound, we've got the Banking Bros podcast to walk and talk you through the save and spend system, or, of course, how to save and spend your money at the exact same time. And my buddy Jesse Durham, back in 2015, 2016, as we were learning this, decided to get started with buying whole life insurance of all crazy products to build toward our goals of wealth building, privacy, independence. And I think this July 2026, in our sesquicentennial of this great country, it's a great time to recap, review, and invite him into the studio. Living benefits is your word of the week. This term typically refers to riders that allow the policyholder to utilize the policy prior to the insured's death. In most cases, the terminal or chronic illness provisions for an accelerated death benefit is the rider someone may be referring to. Second, utilizing cash values and the borrowing power of the owner to get money today for banking via the paid-up additions rider would likely be considered a living benefit to most. Jesse, welcome back to the desk. You are in the studio with me, and we're going to talk through and maybe go back, maybe contemplate, maybe correct mistakes. We just want to know about 10 years, congratulations, in this game of IBC.
Thank you, man. I appreciate that. It's a milestone. I like celebrating milestones, so it's been on my radar for a while as I've been coming up on it for sure. Very interesting to be in that 11th year now. New decade, starting a new decade of the process.
So what I always reflect on as I hit my 10-year anniversary just a little bit ago this spring is how often I'm looking forward to the next milestone and the next goal and not maybe appreciating where I've come from and what has been going on so far, what has transpired. So first off, remind us again quickly for all of those folks who are new to hanging out with us, haven't seen Jesse in the studio for some time. Tell us where you were, 2015, 2016, when both you and I started to hear about this concept from friends, from business colleagues, and guys who said, man, you gotta listen and read this book and come to this seminar. What was your life like then?
Yeah, 2015 was what I call my renaissance year. I had just pivoted from being a full-time employee, being a teacher for the state of North Carolina, to taking my first business from part-time to full-time. My wife gave birth to our second son, so we had a lot of things going on, but thankfully, I call it my renaissance year because it was a very open-minded time of life for me, and that meant a lot when I got an invite from a friend that said, hey, there's a guy coming to town, he's going to give a talk, you should show up, it's about becoming your own banker. So I said yes.
Yeah, very interesting. So financially now, where would you... how would you describe your financial situation at the time where you're considering this idea and seeing it first?
Yep, behind the curtain, I would say we would have looked very much like a typical American in that my wife and I had both gone to college, so we had student loans, we had the family car note, we had credit cards, we had some medical expenses, second son being born, so we just had a broad array of debt. We had about $50,000 in debt.
Wow, okay. So lots of people that we coach and teach now are in that same position, like you mentioned. Mm-hmm. And they think they're starting too late. They wish they knew this sooner. There's so many things that they feel that they're behind on in the educational arc of trying to figure out, what do I do next? Or how do I do this? Am I doing something or am I buying something? How did you feel in terms of where you were in life, timeline? Hey, this is the perfect time to start, or man, I just wish I had done this sooner, or this is going to be great for us. Was your wife on board? Like just in the educational arc, your age, having 2 kids now at this point, very similar to me is where I was at this time. But how did you feel at 31 years old?
Yeah, right at 30 years old. So a lot of things. I would say that I was doing the best that I knew how with what I knew at that time. So I would actually put the education meter at 0. So when I saw a presentation on the infinite banking concept and then got into the Becoming Your Own Banker book from Nelson, it was my matrix moment. So I would say that's just me coming out of the matrix. I'm at ground zero.
Okay.
But up to that point, I we were contributing to our qualified plans. We had paid cash for some things along the way as well, even some big things like vehicles and whatnot. Even though that we did have the debt, we thankfully owned our property outright in our home and everything. And I'd even gone out, tactically speaking, and gotten whole life insurance from a mutual company, but it was just trying to check the box of, okay, I'm a new dad now. Yes, I'm a husband, so I should have privately owned insurance. But that's where it stopped. So I was at ground level when I was exposed to infinite banking for personal finance in general, I would say, looking back now.
Okay, so so many questions to unpack in there, but I don't think that we'll have time today. We can always find you at durhamtalents.com.
That's right.
And you have social channels as well that we can connect to, and we should, and we normally do. But let's just jump into getting some policies now. What did you know about custom designed or properly structured? We always put those types of qualifiers on these types of whole life policies, and you said you had a traditionally built one.
Mm-hmm.
So did you get a bunch of them? Did you get one? How did you know you could use it? Did you use it right away? How did you start in the first year or two?
Because what I gathered from infinite banking was that this was going to be our way to both do something legacy-wise. So it was going to check the box again, but it was going to have the added concept. The second thing was going to be, well, we're going to be paying a significant premium here. It's not trying to pay as little premium as possible for the death benefit, but it's rather we're trying to fit in what we can bite off to you as much premium as makes sense in this first policy. So the first policy was on me. We did get a second policy on Lauren about 8 months later.
That's the first time her name has ever had 2 syllables. We've talked about that.
You teased me about that. I guess
Okay, but I want to know, how long did it take before she was on board, or when you got her a policy? Did you guys talk about it together? Did you make a move and just try to string her along, and she was home with 2 boys and didn't pay attention much at that time? Just what was the dynamic of the relationship?
She's always been very much down for the cause. So she was not in the weeds. Not to say that she didn't have questions, not to say that I wasn't, and it was in my excitement bringing information to her, of
Right, of course.
But she wasn't necessarily pursuing, the further reading and videos and things that I was taking the deep dive. So she's just always been down for the cause.
Good. Okay. That's wonderful. Obviously, having the right communication and relationship with your partner. I always say he, she, and we is what I'm saying these days, because I was in that same position in 2016. He, she, and we. 2 kids at that time. Mine were 2 and 3 or 4 months, which is very similar to the ages and stages in life. I'm only a year and a half older than you, so wondering how that dynamic went. There's a lot of people that we counsel and we coach who don't know how to have these conversations with their family members.
Yep. I'm not saying I did it well, but we had the conversation.
But there's another, I saw recently a meme out there that said, if you think having the conversation, the tough conversation, is going to be hard, imagine what happens when you don't.
That part.
Yeah, very interesting perspective here. So that's why we're asking about that. So what were some of your initial goals and processes? We got the product. It was set up this time on the right platform.
Mm-hmm.
So what was the process you wanted to use it for? What were you guys doing? Were you tackling debt?
Yep, we tackled the debt right away. Exactly so. So yeah, for Lauren, I would say it checked the legacy box, and also we had the beginnings of the process geared towards, okay, we're immediately paying this premium. We paid a full year's premium up front, so we'd have the cash value right away to begin.
As did I. I don't think we knew there was an option to pay monthly back then. Yeah.
Right.
So everybody says, when I said, I chose $10,000 as my initial premium,
Same.
didn't you? Yeah.
Same.
Okay, we both did a $10,000 premium. We weren't nearly as good of friends at this time, but we were buddies for sure at that time. So we didn't have any contact or connection to each other when we both started. I had gotten a policy by March of this year, and your policy, first initial, hit the 10 full years this month in July,
Yep,
as
July.
we record this and post it. So we chose the same number. But there were many things about construction of the product and the platform we didn't know. They didn't tell us. They didn't walk us through it. Fortunately, we were with people who knew what they were doing and basically did the right thing, other than lots of extra education. Now, I don't know that I was ready for any of that extra education. I don't think I would have understood
That's also fair.
Yeah, but at least we go, oh, man, well, I got the right thing. Oh, I probably would have changed 1 or 2 things. This rider right here, I may have put a little, but I didn't know. And of course, we had the right product and platform. So when we get to the process, how did you feel what I like to call the capital crunch? I put in 10, but I can only leverage. I already put that in the question. I can only leverage XYZ. How do you feel with a growing family, with bills and with debt, on how fast this was going, how well it was working, how much money you could use?
For sure, it's a challenge. And Nelson talks about Parkinson's law in his book. So, of course, delaying gratification, of course, not having 100% liquidity. Of course, now I would say, I wouldn't have been able to say this then, there's no loss of value, but there is a loss of liquidity. Sure, I felt the crunch then and there in the beginning, but of course, being able to hear other people's experiences was helpful to me, saying, okay, but it gets better next year and the next year and the next year, guaranteed fashion. That's what it's going to look like. And of course, now I'm on that side of it, looking back 10 years, and I see that having panned out. But yeah, in the moment, for sure that's difficult. But also being able to check something off the box for us, go and pay off this credit card. Okay, well, that is done.
Yeah.
Even though it's a small win, it is a win, and the box is checked. And we did do something. We did move the needle.
Yeah. What were the things that you learned along the way that helped you understand the mistakes you were making? Did you make mistakes?
Yes, I made mistakes. I actually released a particular video where I laid out every single one that I could think of 10 years. Because I want people to know these kinds of things. So I released that, for sure. So to pick ones, it's kind of hard in the moment for me. Education is still the most important thing. I feel like what you were describing a minute ago, I wouldn't have even known what to ask. So I feel like I had a strong I had a great desire to continue learning more. And you can only absorb so much at a time. So I think as long as that is the focus, that's probably the biggest way to avoid mistakes, is at least be applying yourself in seeking out more information, more details, more nuance, more specifics, by connecting with people and rereading the book and listening to quality information.
Yeah, man. And along that journey of personal knowledge, you and I both were on. That's when we really became friends. Mm-hmm. We started calling each other around 2-3 times a year to chat about this. I read this. I found this book. Oh, I learned this one secret from someone else. Let me call you and talk about it since we started about the same time. Did you know this? Because I'm just figuring it out. Maybe we can talk about it partially because I'm scared to call the people I learned it from, or I heard that someone else was doing this. But that's how we I remember having 1 or 2 of those calls when I was on a long drive somewhere in a place that I could not tell you where I was. But we talked for a while, and I think I was lost, or I was going to be lost, navigating, so I pulled over, and I was talking to you for an hour, trying to go through some of these epiphanies that I was having.
Yep, there were subsequent light bulb moments.
Of course. So let's fast forward. Tell me about your family banking system now. Mm-hmm. How does it work in your family? I know that your children are also a part of the conversation now, so what does it look like now?
Man, the steps to where we are now have been exciting at the time. So we got our first policy on me within 8 months or so. We got a policy on Lauren. We were still paying off debts, and of course, but after that initial ball gets rolling, some opportunities presented themselves. Of course, we did continue to grow as a family. So our first 3 children, we have 4 now, but our first 3 children at the time, we would have gotten a policy on each of them, and that was, of course, a great thing because I was in my 30s, beginning my 30s. So they're literally decades ahead, tactically speaking, positionally speaking, than where we were. And then, of course, now we are with the education and experience that we are, so we can be verbalizing and communicating a lot of this with them. But now, here, even in the past 12 months, having our 4th son born, we've been able to do a lot of things for the first time. He did get a policy as well, but it had all the bells and whistles that we would have wanted, knowing what we know now after 11 years. I got another policy on myself because the family has grown, business is growing, etc. And I actually maxed out my insurability, meaning I communicated with the insurance companies. I'm like, how much will you give me? And I pushed it right to the edge. Being able to do some things like that, hit some milestones like that are very exciting to me. So we've got a system of 8 policies as of today.
Looking forward to illustrating those policies very soon. There's a new tool that we're starting to hint about that's going to help us all track it and help us have a community of coaching together here at the Cash Compound. Very excited about that. So we'll hear and see more. But let's wrap things up in our podcast conversation today with your clientele now. As you coach folks, as you help them start, is it hard to take them back to the beginning? Is it hard to see it, or you're like, no, now I know how to help other people who are where I was, and there's nothing to worry about? Is that the message you give them, or it's like, or is it a little bit different? Like, hey, you really need to speed up and learn. I don't know. Just how do you handle people who are listening to us for the first time? They found us in 2026, and they're like, you know what? I think you can guide me through, but where do I start and how do I do this?
Yeah, you know what it's like. Well, there are lots of structural things on our end where, again, we're like those folks that helped us in the beginning. We know what we're about. We know what we're doing. We can walk with the walkers, jog with the joggers, run with the runners now. But it's also still very much an organic conversation around what are your goals, your plans, your priorities. So both those things are happening at the same time. Folks are able to show up now, and we've been sharing information publicly for several years, right? So the learning curve of the person who shows up on our calendar now, I think, is potentially very different because they get to know us and hear about all these things. They get to watch that video on the 10 years of IBC mistakes and everything else that we've put out, and then they get on our calendar. And, it's a very set process as far as, yes, I know the steps to be able to walk with you as you're ready to progress, but again, you're in charge of that organic side of your goals, your dreams, your ambitions, what you're looking to accomplish. And when we put that together, it's pretty smooth process.
Find them, follow them, ladies and gentlemen, and get your finances straight. Jesse, thanks for being back with us in studio, and we look forward to the next 10. Congratulations on Decade 2.
Thank you, man.
Jonah, we are back.
I'm ready.
Ladies and gentlemen, come on down and play a little game with us that's called Back in the Day.
Is this the prices back in the day again?
Prices back in the
Okay,
day, Jonah.
got it.
1926, 100 years ago.
I told you I was watching that supermarket sweep
Yes.
from the 90s. I only watched half of one episode, though.
Did you watch? Was it on air in 1926?
No, but I felt like I did pretty well the last time we played this. So go back and listen to that episode, find that, and see how I did.
Okay, what I'm going to do is I'm going to name some items, everyday items and consumer goods from 100 years ago. Jonah, I want you to guess about how much money it would have cost.
Yep.
Okay?
Yep.
Here we go.
I'm ready.
1 out of 10. Question 1, the monthly rent.
100 years ago?
100 years ago, the monthly rent, I want you to be within $5.
$21.
That is incorrect.
Man.
Wherever we are in the U.S., they say it was $60.
60?
$60
I
for
needed
rent.
a frame of reference, and now that I have it, I'm locked in.
Now, you know what's interesting about that is often back then you could rent things weekly and daily way more often. You see that in books and like movies and stuff, is these people were not on leases
For
a year.
Yeah.
Yeah, back then. Okay. A new car. A new car, 1926. So I guess these are Model A's and T's. I don't know.
If rent is $60,
What is the car?
the car is $100. The car is $100.
No.
Final answer.
Fine. No. It's $825 for a vehicle.
I needed a frame of reference. Now that I've got it, I'm locked in.
All right. You said that last time.
Deja
Over
vu.
two.
Here we go.
A new house.
Yeah, okay. Now I'm locked in.
Okay, a new house. I want you to be within $1,000.
Yeah, $3,500. Man,
Okay,
how much does it cost?
$6,000.
$6,000.
$6,000 at that time.
Okay.
Okay, a restaurant meal. You sit down to have a restaurant meal. Remember, your rent is $60. We're assuming this is the same All-American man.
Yeah,
I guess. His new car that he just got, model A, B, C, or D, I don't know what it was at that time, is $825.
A restaurant meal for one.
A restaurant, I'm going to say for one.
$10.
$10?
Yes.
That's what it costs now. What are you talking about?
A restaurant meal?
$10?
Yes, for one. If rent is $60, sit down at $5.
It costs $10 now.
It does
What are you
not
talking
cost
about?
You can't eat anywhere for less than 22 right now at a restaurant. You talking about fast food?
There was no fast food back then.
That's what I'm saying. Somebody got to make it.
What is wrong with you? $1.
$1 and rent is $60. They were upcharging like crazy.
Oh my goodness.
All
Okay.
right, well, I'm doing poor for those of you at
Yes.
home. I'm not doing so hot.
All right. Weekly groceries.
See that if
You
if
killed
you
me
can
with
eat,
a restaurant meal for for $10. You killed me on that one.
if
What?
you can eat at a restaurant for $1, then weekly groceries.
Remember,
got-
okay, hold on. Let's go back to the previous 10 that I asked you. A gallon of
Okay.
milk, 56 cents. Loaf of bread, 9 cents. Dozen egg, 36 cents. Pound of
Okay.
coffee, 47
a
cents.
week of groceries.
Week of
then.
groceries,
$5.
$10.
Oh my goodness.
$10.
They're
All right.
obviously eating way more than I thought they were eating.
This one is the most surprising. Coming up next.
Okay.
You are 0 for 5.
The rest of these have been surprising to me the whole time.
And I don't know where we got this information. Fact check us, ladies and gents. All right. So this one is probably the most surprising, I would say, on this entire thing.
All right.
College tuition, annual college tuition in 19 and 26. Great Depression. We are
And the
Wright
house
brothers are alive.
Cost $6,000.
House costs $6,000. You want to go off to college?
There's no
annual
way
tuition.
In my mind,
Now, not room
that
and board. It says tuition.
There's no way in my mind that annual tuition
I want you to be
for
within
1 year of college
If you're
is
within,
going to be more
hold
than
on,
a house.
Okay, I'm gonna get. You're gonna get this right if you're within $2,500. I'll give you this one.
So hear me. Tell me if
We
I'm
gotta-
getting close. There's no way in the world that annual tuition costs more than your home for a year of college. So we are 6,000 and under immediately.
That is correct.
Okay.
Now I don't know where we got this, ladies and gentlemen. This did not come from the National Bureau of Statistics, right? We just gave chat some prompts in here, so I don't know which college this is or anything
Okay.
like that.
So if we're under 6,000 and the car is going to cost
$825.
$825.
If you're within $2,500, I'll give you this, but it is less than $6,000.
Right. So 1 year annual tuition, $1,500.
What did I say you had to be?
Within 2,500. There we go.
$70.
Whoa. That's insane. That is
Yeah,
surprising.
we gotta go back and fact check us on that one, ladies and
Whoa.
gentlemen. So see if you can find
That's
what were
the
they charging
same
at Yale and
price
Harvard.
as the something else was $80 a second ago.
I mean, rent was $60.
Yeah.
College tuition, not room and board.
You can
$70.
live somewhere or you can go to school. Same price. All right. That's what I'm saying. Rent is too high.
Maybe this was a nice place.
Rent is
I don't
too
know.
high.
I don't
No
know.
way.
Okay, here we go. You
can
got
eat
one for
for
$6.
$1, but rent is $60. I will sleep outside and eat.
Yeah, who
for-
knows?
yeah, there's no way.
Who knows?
Uh-uh.
Okay, we're doing the best we can out here. A newspaper. What the news? Remember Newsies? Look at me, I'm the king of New York. What did the newspaper cost in 1926?
A dime.
The Pape.
A dime. 10
3 cents. 3 cents. Not giving you that one.
Oh my goodness.
A wristwatch. Oh, hold on. Make sure the people know.
A wristwatch. $1.
$6. A suit, a men's suit, a men's dress shirt. Previously was discovered to be $1. A pair of shoes was $4.
Yep.
What is a suit?
$3.
$25.
There's no way. This is not adding up. This is not adding up.
Average annual salary. Last one, take us home. The average annual salary. Now, what do people do in 1926?
1926.
Give us something that's actually relevant because you're too young for me.
Cities, I mean, and cities just started to pop up. People are doing stuff in cities.
Cities
now.
have been around for quite
but
some
I'm saying
time.
that people moved into the cities. That's what you think of in
They
the
are
20s.
moving industrial.
Like great
yes.
Gatsby. Like that's what people
Industrial
are doing.
revolution is well underway. This is now the Great Depression.
Right.
People do
In
live
America,
in cities.
people are trying to start their own businesses. People own bakeries and shoe shops, and
Of
that's
course.
what people do.
This is
So-
before Walmart, so yes, and the A&P.
Right.
You know what the A&P is? It was Walmart before Walmart.
Okay. So people work in factories is where people work.
Sure.
And the average salary of that is
They're paying rent $60.
Yeah, the average
New car $825. New house $6,000. What's their salary on an average annual basis?
3,000 a year.
$1,200. Before we get into what happens next, Jesse, we've had 250 great years in this country, the sesquicentennial of our country, with a lot of great minds who put into place something that gave liberty and justice to all, at least in theory, and we're doing that financially for people. What's your parting thought for our listeners?
Yeah, my parting thought is that R. Nelson Nash is the founding father of the infinite banking concept. So a big part of freedom for me is financial independence, financial autonomy. So it's a very practical, realistic thing that you can do to go out and create that for yourself, your family, generations to come, financial freedom through this infinite banking concept. Study it, vet it, implement it.
On our next episode, we're going to find someone who has implemented this opportunity for his family and now has opportunities for you to deploy capital into potential investments and cash coming at you each and every month. Hunter Gore is coming up next.
You are now tuned to the banking bros. Said we couldn't make it, 3 cups settled, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.